Welcome to Trading Lounge and the European indices. However, we're going to start with the S&P 500 today, just so you've got a general feeling of where things are. And what we're looking for across all indices essentially is a five-wave structure to the upside here. It's a 2-hour chart. So we're looking for 1 and 2, a nice third wave, ABC for the fourth wave, and we're looking for the fifth wave up here. So we're counting 5 waves in this last sequence here. That should take us up to the sort of 25, 21, 25, 21, 30 sort of area there. I won't drill into it too much because I want to spend time on the European markets, but this particular pattern here is quite common throughout the markets, as you already know. So I'm going to go to the FTSE now. We haven't had a look at the FTSE for a while, and this is on a 4-hour chart, so it's going to look a little bit different. But the 5 waves that we're looking for here are in this little area zone here. A little bit rough here, but and I'm not going to go into the further into the intraday on this one here. We'll do that on the DAX. But in a way, this is wave 1 to this high here, wave 2 back into here. And then if you've got a keen eye, you can see 1, 2, 3, 4, and 5 here for the third wave. This is the fourth wave here. And the fourth wave may get a bit more complicated here. There may be another swing down before we see a swing up, but essentially we're looking for another move higher here. So just that leg to finish in this space here. So probably around maybe Monday, Tuesday for that to occur. So anyway, that's where that is there. If you understand the trading levels, of course, then if from 6,000 here, this is all of group 1 here, and group 1 is 100, 200, and 300. Well, I always call it 1, 2, and 3, keep things as simple as I can. But when you're talking the 100 here, we're talking a degree of minor level. So this is minor group 1 here. And even though the market, because normally when we're working with minor group 1 here, especially the top of minor group 1 here, the 3 here, if this becomes tested support, then the market would move up to the 5 from that point. But I expect it to move above it. But moving above it doesn't mean that it's a tested support. A little bit like here, this market moved above here. And then drop back down. So it's kind of what we're expecting here as a failed support on this particular level here. Also in the bigger picture as well, while we're here, is that when the number 2 here, the pivot within group 1, becomes a tested resistance, then the market is pulled down to the closest largest number. It'll be this case here. Because when the 3 here becomes a tested support, what happens psychologically is humans tend to look at the next number, which will be 5 up here. And in the markets, 1 is the strongest number, then followed by 5 is the second strongest number. So what happens when 3 gets tested support? It's telling you that it's going to be pulled up to 5 at that point. If it fails to do that, and then the 2 becomes the tested resistance, then it will be pulled down to the closest largest number, whatever that is at that point. I'm going to move on to Bayer at the moment. And then we're going to look at the AEX and then the DAX. Now, the reason I'm looking at Bayer 4, if you haven't been sort of tuned in, we've just been really leaving this on the weekly chart, and we've just been talking about how to read price and volume with this. And the lesson so far in this is that corrective patterns, be them triangles or whatever corrective patterns they are, they're normally, well, they are continuation patterns, and they're normally on low volume. So when we're looking at this moving up, the trend is moving down, this trend here is moving up, but you can see that it's on lower volume. So you wouldn't trust it. It's, it's because a trend, be it up or down, needs increasing volume. So when this bar started here and this one, we could see, just to, I won't read it bar for bar this time, but because we've already done that. But basically, as this is moving down here, we're seeing increased volume moving in here. And on this bar here, we could see that this volume bar here had more, because there's only 2 simple rules in reading volume, and one of them is the relationship between these 2 volume bars, this one and this one. And then the relationship between the volume bar and the price. So in this one here, we could see that we had increasing length in the actual trend coming down, the range of the bar, and we also had increased volume compared to the previous bar here. So a nice, a nice move down. That said, what we could also see here as well is that it never closed on its low here. So some of this volume would have been part of short covering coming in, profit taking coming in here. And also too, you get normally, you could look at this in a third wave if you wanted to, but you could also look at it in terms of stops being taken out and being triggered real quick as well. Now, this particular bar here, as we pointed out previously here, has got a lot of volume in it, still closed lower than it opened, but the range is much shorter than this one with more volume in it. So it's telling you that there's a lot of volume turned over in a short space of range here. So it's telling you that the buyers are taking it off the sellers at this time, or short covering is going on. And then this starting to move up here. Obviously, this last week is not completed yet, so we don't have a final result here. But we could see that the move up through here, this bar here, even though it was a lot of volume, it was still less volume than the previous bar. Okay, so that's important, that relationship. So it's telling you that it's going up on lower volume. Now, if this week here actually closes lower than this one here, then you know that this is just going up on hot air at this stage. So on Friday close, if this bar here is lower than this one, then you know that this trend is not a trend, it's just a corrective rally, because the volume will confirm the price action and the price pattern here. And yes, you can take this right down and use the same principle on a 1 minute chart or 2 minute chart and so on. Okay, so let's see on Friday where this volume bar sits. If this volume bar's got more volume in it than this one here and it closes higher, well, then we know that the buyers are coming in and we need to be on that side of the market. Okay, moving on now, I want to move to the AEX, and the reason for using the Netherlands chart here is simply because it's got the best, clearest wave count out of the indices that I can see in the European bunch there. So what we've been looking at here is that like the S&P 500 and so on, is that we're looking for 5 waves up here. Now, in this case here, we've viewed this as a wave 4 coming back here. When the wave 4 came back this one pulled back to the 38.2 retracement level, correct, just slightly past it, but the DAX actually pulled down to the 50 and the 60% level down here further. But we still need to treat this as an A and a B and a C wave here. And also what we're looking at here now is we're looking for 5 waves up. So we've got wave 1 and 2 and 3 and 4. And once again, the DAX one is pulled down quite low here, but we still need to view it as wave 4 for the time being, and we're still looking for wave 5 to the upside. Now, normally we would see wave 5 here, this grey wave 5, take out the high of the wave 3 here, but in Elliott terms, it's actually not necessary. All we need to see is 5 waves here, and then it'll be called the truncated 5th wave. But anyway, let's just see how we go with this. We need to find those 5 waves up. And for the short trade setup, if you find the 5th wave here, in this 5th wave here, in this last 5th leg here, there'll also be 5 waves in that. If you can work those out, then you can short it on the top. I wouldn't go overdoing it though. And what we normally look for in trading, the safer trade, yes, the money's in the turn, in the volatility, not a problem, but this first leg down here, don't go chasing it, because if you don't get it on the turn, just let it go, because this move down here in 5 waves will be the confirmation, will be the evidence that there's a change in trend. Because if you get 5 waves in the opposite degree of the trend, 5 waves down here, that means you'll get another 5 over here. So shorting this wave 2 here is really what you're looking for. So we could say something like this over here, for instance. We've got 1 and 2 and 3 and 4 and 5. Then we've got the A, the B and the C here. So this would be the confirmation of the short. So shorting it anywhere in here. It didn't pull back to the 50-60% retracement level over here, and that should be taken on board too as a bit of a fingerprint for the personality of this market as well. But we can also use the retested resistance of the 450 to short as well. So there's lots of opportunities in here, as long as you don't panic. Anyway, the main point for this is to point out where we are in the wave structure. So when we move into the DAX, you start to see the same thing as well here. So in this instance here, we're looking at it in from this low here. It pulled back a long way, but that's what headlines do. So headline news. So basically, we're still looking for the same. Even this one here has pulled down a lot, right? But we'll just stay with it for the time being and look for this fifth wave to move up here. We can see US indices such as the NASDAQ and Apple, one of its sort of leading stocks in there, has further to go up as well as such. So we're still looking for higher ground, which we're looking sort of, I thought it was going to, at the beginning of the week, I thought would top out sort of, coming later in the week to the Friday or something. But I know that if Friday's bullish, then you're going to get Monday bullish as well, and then she'll start to turn at that point. So there could be a top in here, but we've got a three-wave structure here, so technically we should be taking out this high here. So yeah, the short trade's not here yet, but we can certainly see that this market is struggling now. It was strong up to here. Then it started to creep. That's what a top of a wave structure does. We can see that the moves down are quite sort of sharp, except for this one here. But this wave 4 is struggling to, it only should pull back 38.2%, but it's pulled back further than that. So the whole thing really here is really struggling to go any higher here. Yes, we need to be patient and allow it to play out, but then we can catch it on the downside there. So, all right, well, look, that's it. Thanks for tuning in as always.